Konadu. I'm so excited that you are all here. I am a storytelling strategist. I'm the Instagram manager for the Rising Tide Society page. So if you've been wondering who's been doing all that, that's been me. So I'm super, super excited to be here with you today, hosting my very first Tuesdays Together. I got big shoes to fill, obviously, with Natalie and Kate, but I'm just grateful to be here. So yeah. If this is your first time here at Tuesdays Together, do you mind just raising your hand or whatever in the chat? And if they are new, and if you're an OG, you've been here for a good minute, welcome them, because I want them to know how amazing this community is. Yeah. So if you are new to Tuesdays Together, we're just going to kind of hop on in. Oh, yay. Thank you, Amanda. Oh, yeah. We do have some new people here. Hey, Sophia, and hey, Meredith. And so you guys make sure to welcome them for joining us today. But I'm just going to go into a quick rundown of who we are. So Rising Tide is a community of small business owners, independent freelancers, service providers, creative entrepreneurs who unite in the spirit of community over competition. We have hundreds of local chapters led by amazing volunteer co-leaders and chairs. We have a Facebook group. So if you haven't joined that yet, please do. They have over 70,000 community members. We have educational resources that we release daily, including blog posts, webinars, templates, downloadable guides, and also that is completely free to our community. We believe here at Rising Tide, an empowered creative economy will change the world. And so by elevating the voices of so many of you, so many small business owners, sharing their stories and building a thriving community, we can support you in your pursuit of a sustainable livelihood. So as you know, in 2020, with COVID, shut down our in-person meetings. So this is why we now have our monthly meetup, and how it just was such an amazing positive response. We are going to continue doing these monthly meetup as an accessible educational event every single month. So I am super excited today to be welcoming Matt Mohning of MSM Financial, who is going to be sharing with us today all about financial planning. I know this topic, it's not considered one of the sexiest topics, but it's so necessary. It's so important to talk about. And I'm gonna be real with y'all, Matt is my financial planner. So he is amazing, and he definitely knows what he's talking about. So I'm really excited that he's gonna be here with you today to share his expertise. So also too, we are going to run a little contest that we have been doing. So to thank you so much for joining us live, we are going to add some excitement to our day. We are giving away a $50 Amex gift card to an attendee if you tag Rising Tide on Instagram stories while you're tuning in, and you can share how you're watching and listening. And maybe either a new learning quote, something that you're learning, and maybe something that's most quotable, whatever stuck with you during this webinar. So yeah, I'm excited. And I'm just gonna give a quick rundown really quick for Matt. So he is founded MSM Financial with the simple goal of providing high quality, strategic, focused financial advice to individuals and small business owners. He is a trusted financial partner. He helps small business owners launch and manage their businesses. Families count on Matt to deliver sound financial advice to help them lead the lives they want to live. He's an experienced financial services professional with nearly 2 decades of experience spanning the private and public sectors. His experience includes being a CPA at an international accounting firm and a policy advisor to the chairman of the U.S. Senate Budget Committee in Washington, D.C. And outside of that, he's also a family man who is married to his wife, Beth, and 2 young children. So you guys obviously hear the credentials. It's pretty flippin' amazing. So everybody, welcome Matt. Give him a warm welcome. And thank you, Matt, so much for being with us. How are you feeling?
I'm feeling great. Thanks for that.
Yeah.
All right.
So yeah, just take over.
I will take over. Can you see this?
If you guys can see, raise your hand. Let us know if you can see this.
Sharing the screen here. So we're going to jump right in with this.
Yes.
All right. So let's start here. With these facts, 34% of entrepreneurs have no retirement savings plan for themselves. 40% of small business owners are not confident they would be able to retire by 65. I'm starting here because this is why I think we're all here today. With this topic and with this group, these are kind of eye-popping stats that first raise some alarm, but I think when we talk through this today, we'll get to a point where we can get a plan and there's comfort, and that's our real goal here. So it's so good to be with you. Thanks, Akua, for this. I've known about the Rising Tide and HoneyBook and the amazing community you have. So I'm super excited to be with you today and to get to take part in this, talk about a topic that's near and dear to my heart, financial planning for business owners. Here's a little bit of my bio. I won't focus too much on that. In this, so I love talking to business owners and I love thinking about financial planning for business owners. I am a business owner. So my story, kind of on the facts of this, I started my career at a big CPA firm, decided to get out of that, went back to public policy school, got a degree in public policy, and then spent quite a bit of time in Washington, D.C. I moved back to Minneapolis, where I'm from. And at first, for a few years, I was a stay-at-home dad, and then launched this business and built it up kind of from the ground, first as a CPA firm and then adding financial planning. And what I love and what I get the most joy out of is hearing people's stories about launching their businesses and their personal financial goals and really putting a plan in place to help them get there and achieve it and think through it. So that's about me. That's sort of my story. Here's my contact information if you want to hit me up at all and talk through your situation. I'd love to talk. Quick legal disclaimer. My attorneys make me put this stuff in. I'm not going to focus too much on it, but the goal today is just to provide some broad-based advice and topics. You shouldn't take it as sort of personal financial advice for yourself. You should consult your own advisors. But with that, let's sort of jump in. So here's the plan. And real high level, what I did is with the questions that were submitted, I put together some slides to cover some topics, just to give us a base sort of foundation knowledge that we can build off of on these topics. Throughout, if you've got questions, please ping me. I'd love to just take those on as we go and make this as interactive as possible.
Hey, Matt, I'm so sorry to interrupt. The slides aren't scrolling.
Okay. So you're not seeing this at all?
No, we just see the title slide.
All right. Yeah, because on my screen they're scrolling down.
Do you maybe want to stop sharing the screen and reshare again?
Yeah, we'll start off. Yeah. Sorry about that.
Okay, we're gonna get this.
You see them this way?
Let's see here.
Are they the same issue?
Well, share it again. So share your screen again, because we don't see anything at all right now. They just see
all
us.
Right.
Then yeah. So then let's try
Sorry
that again.
about that. Do you see them now this way?
Now you can see them. Yes.
Okay, so maybe it's slideshow that's not working. We'll just do it in this view, and you'll be able to see them on the sides. Not quite as fancy, but
okay,
you can see it. Does that work?
Awesome. Can everybody see that? Just let us know.
Yeah. More importantly, it sounds like maybe the slideshow is not working. Awesome. So, like I was saying, I will go through sort of high-level topics based on the questions that were submitted, and that's the stuff I put together was really to try to answer your questions, give a foundation on some high-level topics, and then throughout, if you have questions, let's jump into those. Otherwise, maybe we can have a robust conversation at the end that really gets into your specific situations. Sound good? So we'll talk about operational best practices real quick, and then go through retirement savings basics, just to get a high-level strategy around that. Employee benefits for self-employed individuals, go over some debt management, some key planning tips, and then we'll jump right into Q&A. On the operational best practices, I think this is a great place to start, and there were a lot of questions around this. We'll look quickly at entity selection, go through some basics around financial operations, and then measuring performance. So in financial planning for business owners, it really starts with getting the business functioning. At the end of the day, if your business is operating well and you're profitable, there are options for retirement, and in fact, more options. So we start with that. There were several questions around entity selection that centered around being a sole proprietor or a limited liability corporation or an S corporation. So I thought we'll start here as a basic starting point. The basic sort of entity structure for small business owners is a sole proprietor. And this is really where you're operating under your own legal name. So there's no legal formation. You're the only owner, and your social security number is your tax ID. A couple of key things on this. You have unlimited personal liability if you are operating under this structure. And then from a tax standpoint, you're taxed as it's taxed on your personal business return. There's a separate schedule called the Schedule C. The next level up is a limited liability corporation, an LLC. And what this structure adds, so you're creating a separate business structure. All 50 states now allow LLCs. And some key features are you're limiting your liability, which is right in the name, because you set up a separate legal entity. You have a separate business EIN number. And this can be pretty simple. Even a lot of people use their name. So if it's your name that you're really marketing under, you could have your name and then LLC. If it's you as a single member, you're still operating under the same structure on a tax standpoint, where it's a schedule on your personal tax return. It does allow for multiple owners, and that becomes a partnership, and you can share profits however you so choose based on the partnership agreement. So definitely some benefits to that. I really encourage everyone from a basic standpoint to, if you're operating as a sole proprietor, to at least consider the LLC option. It's pretty inexpensive and pretty straightforward to put together. And the next piece is the S corporation, which is a little more complex and a little more involved. The key features to that are, from a entity structure, you can be set up as an LLC or a corporation. Key distinction there is if you see Inc. behind a name, that means it's set up as an incorporation or a corporation. And then what you do is you elect to be an S corp. So that's a taxing structure. So it's a real piece of the tax code. Again, this allows multiple owners, and your profits are equal to your ownership percentage. This next piece is a really key feature, and a lot of times in the planning and what I sense from the questions that you all asked, what people are really getting into is, in S corporations, you're paid in two ways. The first thing is that owners have to pay themselves a salary, and it needs to be a reasonable compensation. And that is so that's a W-2 wage. So you're paying yourself payroll. So there's the added complexity of that, where you actually have to go through and do payroll. So definitely some added pieces to that around administrative burdens. And then the other piece is that the profits, so after you take out all expenses, including your own payroll, those come out separately. And the reason our S corps are considered and looked at a lot, and it's a planning tool, is that there can be some tax savings around this. The payroll is subject to Social Security and Medicare tax, which on a combined level is 15.3%, but the profits are not. So the profits are subject to income tax, just like your earnings would be, but there can be some savings around payroll tax. Some key cautionary tales around this for people that are considering this. It's really important that you pay yourself reasonable compensation. So you have to pay yourself a reasonable salary. The second thing is, and we'll get more into this, is from a planning perspective, if you're paying yourself a lower salary, that is the base that you use to figure a lot of retirement contributions. So you might be limiting what you can set aside for retirement. So it's not always the best option. You really have to look at your situation and look at if you have employees and things like that. Again, it offers the personal liability, and then you do have to file a separate tax return. So those are the basics on entity structure. Some financial operation tips, just from, like I said, I'm a CPA and a financial planner, so I really deal with a lot of this and business formation and setup. And these would be there are questions around best practices and then mistakes that I see made. So I think this fits into both of those. The biggest one I see and that I would suggest is setting up business checking account and a credit card away from your personal financial interests, so away from your personal accounts. And when you're looking at a bank, a few things to consider. One being, there's a balance between the size of banks and what they offer. And on one side, smaller banks offer probably better customer service in the sense of your banker may know you, can help you when you need loans. So it's always good to have that in place. I saw that a lot, helped a lot of people with PPP loans. And there was a big benefit to having a bank that knew you as a customer and that was willing to work with you. On the other end of balancing that out, Some of the bigger banks have better technology offerings. So trying to find that mix of what you need and what works best for you, I think are key when you're choosing the banking functions. Because things like QuickBooks and payroll platforms, things like that need to link to your bank accounts. You just want to make sure whatever you're using on those or that you plan to use would link up with your banks. Not all banks offer all of those technologies. Again, I would really just avoid mixing business and personal funds. We want to make sure that you're tracking how your business is performing. So keep track of the money going in, keep track of the money going out. Try to pay yourself a wage or distribution based on your living expenses. This is just a good habit to get into. And I get it. There's the whole bootstrapping element of a business. And can you really pay yourself a steady wage or a distribution? I use those interchangeably. If you're an LLC, a single member LLC, you're not paying yourself a technical wage. It's a distribution. So how you get the money out, again, that comes down to the entity structure somewhat, but at the end of the day, it's how much money are you paying yourself through those different means. The more you can get into that, I think it helps you evaluate how you're doing as a business owner. Capitalize your business. So one of the things I see business owners really struggle with, and to the extent possible, is coming up with a plan and then having enough money in place, enough capital in the business to run it effectively, especially in the beginning when revenues might not be as predictable. Really making sure that there's a plan in place, which could include a loan, kind of going back up to the beginning, so that you can not be constantly trying to just figure out how you're going to pay expenses. See a lot of time committed to that, and that can be, a real hindrance to trying to run your business. And then grow with a plan. I've seen businesses that scale up and there was not really a plan in place, and they might be adding expenses and revenue, but at the end of the day, they're not adding profits. So as you're growing and thinking through things and building your business, it's really important to pay attention to, is the added expense contributing to greater profits and producing better outcomes. Measuring performance. This is key for businesses and the start of financial planning. Think about how you're doing and what your goal is, and then tracking it. So for business owners, especially if you're a sole proprietor, a single member business, and it's really you and you're the show, you're contributing your time and your money, and track both. They are finite resources, both. You don't have unlimited time, you don't have unlimited money. So thinking about how your time produces profits in your business is a huge part of it, along with the money side. Make sure you keep books and prepare and review monthly profit and loss statements. So I think early on in businesses, this is sometimes put in place, sometimes not, and it can be a mix. And this is one where it really is important to take a look at how you're doing and measure your performance, especially when you go off on your own initially. There's no one else typically watching your business or looking at it. It's you. So that it's important to reflect on how you're doing, think about the things you're doing differently, look at your expenses and ask yourself if those are helping to drive revenue and to help grow your business. And then come up with some key performance measures that fit your business. And there are some basic ones around expenses. I like to think about your business and what's going to drive revenue. So I put some on here that I think can be great depending on what your business does. So tracking time to revenue. So your marketing hours a month versus revenue. So if you're putting in more time to marketing, is it really working? Are you driving revenue? If not, then you can tell that marketing plan is not working. We need to do something different. Same thing with expenses. So if you're using paid advertising, you can do that same thing. And around performance typically drives our businesses. I know it is for mine. If I do a good job for my clients, they're more likely to refer me to other people. So whatever the customer processing times or whatever you're using to track really the customer experience can be key. So things like that, and just trying to measure your business so that you're helping to drive your time and your resources to the best uses. Now let's get into the retirement piece, kind of that next level what we're going to talk about and go through some real quick basics on retirement savings. I know people come with different knowledge around these. So there are two real basic types of retirement plans that fit into either pre-tax or after-tax. So pre-tax plans, the contributions are deducted from your taxable income. So you get to defer taxes on the contributions. The funds grow tax-free, and then distributions are taxed at the time you pull that out. There are some penalties for early withdrawals. And these are your traditional IRAs, your SEP IRAs, 401ks. We'll get into more of those here in a minute and more specifics. And then after-tax plans. And those, the contributions are not tax deductible. So the money put in, you don't get a tax break up front. But the benefit is the funds grow tax-free and distributions are not taxed. So you get to pull out the earnings all tax-free at the end. There are penalties of early withdrawal of earnings before retirement. So we want to make sure we're putting money in that we can leave and dedicate to retirement. And examples of these are Roth IRAs and Roth 401ks. Real quick so now we'll go through the sort of specific options. So one of the most common pre-tax ones is a traditional IRA. And in this account, you can put a maximum of $6,000 or $7,000 if you're over 50. These are pretty easy to set up and administer, and there are some income limits on these. So those are careful that and as we put together a plan, we're really paying attention to these income limitations. I won't go through all the income limitations. I really put these on there as a resource. We can go back to it, but I don't want to spend a whole lot of time getting into all the details of those, but more the key on all of the income limitations is understanding what the income limitations are for the specific plan that you're looking at. And then, as you'll notice, some of them relate to whether you have a workplace retirement plan or if your spouse does. So there's a big coordination that goes on in the planning space around what you'd be eligible for based on not only your situation, but a spouse if you're married. The counterpart to that is a Roth IRA, same income limitations, the $6,000 if you're younger than 50, $7,000 if you're over. The key here, thinking about, so in a traditional IRA or a Roth IRA, you can contribute $6,000 to one or both or a combination of the two, but the contribution limit applies to those combined. So you can't do both. And both of these, I put these up front because they're the really easiest to administer. You can set those up on your own at pretty much any financial institution or online, as well as through a financial advisor. Kind of the next level, and there were several questions about SEP IRAs, the Simplified Employee Pension Plan IRA. And these are really common for self-employed individuals. And the big thing here, it behaves more like a traditional IRA where it's pre-tax, but you can put in a lot more money. So up to $61,000 a year. And there's a formula that gets to be rather complex. On the face, when you go out and read about SEP IRAs, you'll see that it's 25% of income. You have to subtract out some things. So what it effectively becomes is 20% of your income up to $305,000 would be the max. Those are for 2022. Really important pieces on this. It's a little more complex because you do need to get some legal documentation in place. Although those aren't really complicated and there's some standard IRS forms you can put in place. The big thing when we're thinking about business owners and SEP IRAs, they're great if you're on your own, but all employees must receive the same percentage contribution. So if you start to add employees, you have to set up accounts and contribute for those to employees as well. And it has to be the same percentage. So that can complicate the equation if we're just thinking through business finances, what we can afford to pay our employees plus putting in that contribution level. So a lot of planning goes into that and thinking about that. Some other options that we do see with small businesses still are 401ks, and there are a couple different varieties. One is a simple 401k. A lot of small businesses set that up. It's kind of a next level. The paperwork is pretty streamlined versus a 401k. You can put in up to $14,000. These are pre-tax accounts again. And then you're required to have an employer match. And then the traditional 401k, so this is what a lot of people have at work. It's a little more complex. You can put in a little more money, up to $20,500 for the employee contribution, and then up to $40,500 for the employer side. The rules around matching and requirements for running the 401ks are quite a bit more complex. So when you move down this path, there are companies that specifically help administer 401ks, and that's where we'd get into. So as your business progresses, it can lead to that. A couple key takeaways. When we're from a planning perspective, when I'm working with clients and when we think about this, there are variables and we have to think about all the inner workings of those. Number one is the income, both yours and your spouse, that you have. So thinking about the income limits and what you can contribute, those were kind of key in thinking whether you're going to have employees or not. Because again, looking at a SEP IRA versus some of the more traditional IRAs or even 401ks, those drive that. The targeted savings amount you want. If what you can afford to save and what you are saving is somewhere around that $6,000 or less, then just you can set up the IRA. It's very simple. Do that. No need to add complexity. Tax brackets are very important. So thinking about the pre-tax versus the Roth contributions, we're really looking at the distinction between paying taxes now and letting things grow tax-free or deferring taxes and paying them later. And so looking at your tax brackets now and where you might be in the future are important considerations. And then just the available options that you have and your spouse has. So thinking through all of those retirement pieces and the different income limitations, different pieces like that, all important. And we kind of mix those all together and consider all those pieces and come up with a strategy. A combination of plans is a lot of times the best strategy. So you can contribute to IRAs and Roth IRAs and still contribute to SEP IRAs or 401ks. We look at what your spouse has at work, if you're married, things like that. So coming up with that strategy, a lot of times it's a combination. It's not just one. And then the strategy can really change over time and get more complex as your situation gets more complex. Someone in the questions that were submitted before said, is it better to start late than never? And it's like, absolutely. You'll start where you are where you are, and just getting going and building up, even in the most simplified plan, is the best way to go. And we can always build it up from there. Thinking about some other benefits or employee benefits that you as a self-employed individual don't get directly because you don't have an employer. You are the employer, which means you are your own HR department. So things to consider. Basically, a lot of the employee benefits, and in the U.S., this is just how it is. A lot of our benefits come through our employer, and especially around insurance. So key among those is health insurance. That's a big issue for self-employed individuals. So the big thing on that, and what's been great, is the health insurance exchanges are a great option. So you can go out and shop for coverages and compare coverages based on the needs that you have and your family need. And there are tax credits available and subsidies available. So that's a big game changer for self-employed individuals, as well as employers who want to help provide coverages for their employees. Life insurance, which just provides a death benefit if you cover your lost income. That's something you can go out and shop for. There's a lot of sites that help do that. One that's maybe often overlooked that most people get automatically if they're employed is disability insurance. And this provides short or long-term income replacement if you're unable to work. So again, those are just things to consider if you're self-employed that you may want to purchase or not, and just assume the risk. It really depends on your specific situation. And then coordination with spouse is key. And I put this, so if you're married, you really want to look at the benefits that your spouse has at work if they're employed. And maybe it's best to get coverages through their employer. Maybe it's best for you to purchase on their own, but there's a lot of coordination that goes on between the two. A few other things just to consider around business owners. One question was around what products do business owners forget about that they should think about? And this is one where just thinking through the risk you're taking on operating a business, and things you might want to consider buying. So a couple products that are listed, or three that I listed here: general liability insurance, which is just protecting your business against claims related to injury or property damage; professional liability, if you're in a profession where you're providing services. If you have errors or omissions, you can face lawsuits based on that. So that's one where you might want to have that in coverage. I certainly have that. And then business interruption is another one where if your business is unable to operate, you can purchase insurance that will help provide an income. Typically, those are due to natural disasters, things like that. So important to consider. They might not make sense, but you should at least think those through. Another important element on financial planning, and especially for business owners, is managing debt. So let's think about this in a couple ways. Number one is personal liabilities. Number two is business liabilities. And for business owners, like I always say when we're doing the planning, you have to think about both sides, personal and the business, and think about what you're doing and how you're coordinating the two. So personal liabilities, personal credit cards, student loans, mortgages. Sometimes people have those, especially around mortgages and credit cards, and use some of those to fund business expenses. It's very important that if that's what you're doing, especially when you first fund your business to start, that you really tie the transactions. Like if you took out a second mortgage, that you transfer the funds into a business account directly, so that you can really show that those are business expenses, because the deductibility can be questioned. So you just want to draw a real clear line. And then your entity type can impact your deductibility based on, if a sole proprietor, it's a little easier to link personal liabilities, a little more complicated for S corporations and things like that. And then there are a lot of business options that folks overlook, so that you can borrow directly in the business if that's what you need to do. SBA loans and bank loans are a great option. The SBA has a lot of great programs for small business owners. They can help you start and scale your business. So don't overlook those. And then just having business credit cards and lines of credit that are directly in your business, those are more clearly deductible. And this last point, I get that it's a little wonky, but what I say is maximize your after-tax income and net position when determining savings and debt repayment. So what do I mean by that? I get the question all the time about, should I pay off debts? So for example, should I pay down my student loans quicker, or should I invest in retirement? That was actually a question that came through. And the answer to that question is looking at the interest rate on your loans versus, one option is to pay down the loans faster. And we know based on what those loans and the percentage interest rate on those would be, what you're going to get as a return. The alternative is to invest in something like an IRA or a SEP IRA, get the tax deduction, and then have that retirement savings grow tax-free. And what we do in financial planning is model that out and project it out over the course of 10, 20, 30 years, the time that you have the loans in place, the time that your savings would be in place, and look at where you come out the best. So there's a psychological element to debt and financial planning, where some people just really want to rush and get rid of any debts that they have before they start saving. I understand that. And when I do planning, we talk through sort of the quantitative piece of that. So it shows where you'd be better off, and then how it makes you feel. Because it is important to have sort of a sense of comfort around your finances the best that you can. So that's what I do caution people, though, before you just rush into pay off debts, before you build your personal savings or your retirement savings. You might be way better off because of the tax breaks, especially, and the tax advantages to savings, to at least have a balanced approach, if not, even skewed more towards savings. Which brings me kind of just the final takeaway points of what I think is important for business owners and as they think about planning. a holistic planning approach is key. As we've talked through this, it's really, you're looking at all of the components of your finances, your assets, your liabilities, the income you're generating in the business, the amount of money you need outside of the business, your tax rates. You have to think about all those pieces and really pull them all together to come up with a plan. And business owners, it's more complex because we need to be thinking about the business side of the equation and the personal finances, and the two are so tied together. It's really important to balance those. Habits are important, and savings is a habit. I think it's really key to get going. One of the hardest parts of starting a business is a lot of times you're bootstrapping it. You're coming in, you get going, trying to build up customers. The income is not there to really think about savings and retirement savings. It's harder because it's not as easy. It's just not as easy with cash flow. And what I always say is, if we can at least get a plan, even if you're not putting in a lot, it becomes a line item in your budgeting and your planning, and we can build it from there. So just getting a habit, it's a great place to start. And the other thing is, your business is a valuable asset, and focus on building that value. One thing, as I've worked with some business owners sort of on the tail end of their career as they're looking toward retirement, and having a business that you can sell is a key asset. And it's one advantage that business owners have over others, is that they have an asset, and hopefully they can sell that either to a third party, or a lot of times it's to employees that have helped operate the business, and figuring out a way to transition that business and come up with payment over time. So there are a lot of ways to do that. And it's a key thing to think about. And as you're growing and building your business, of thinking about how that business has value. So again, that was hopefully just to set the stage here. And now let's talk maybe about your specific questions about how we can apply these principles to your situation. Let's jump in.
So, Matt, we have one question here from Rebecca, who asked, is an LLC better than sole proprietor?
I think the answer to that is yes. And if we go back to that slide, or at least what it was on that slide, there are a couple key considerations. Number one is your personal liability. So with a sole proprietorship, you have no limit to your liability. Limited, an LLC provides that limit. So anything you do in the business sort of puts a wall between your business and your personal finances. That's the key element. And then if it's a single member LLC, from a tax standpoint and a real financial standpoint, there's no real difference operations wise. So that's why. And I guess the other element I add to that is, in most states, they're not hugely expensive to set up or complicated to set up. In Minnesota, where I am, it costs $155 one time to set it up, and you're done. And again, every state offers an LLC. So it's, in most states, it's pretty easy to set up and administer. So definitely preferred.
Okay, awesome. Well, first of all, Rebecca, does that answer your question before I just even go to the next one? I just realized. Does that answer it, I hope? If it doesn't, just let me know, and we can continue answering that. Okay, so next question is from Vanessa. Am I able to roll over or move funds without penalties from a Roth IRA to a solo 401k if I contributed and happen to exceed the income limit?
So you can typically roll over funds. If you've exceeded income limits, then most times they're going to require you to pull those funds out. So you're saying, trying to think through where she's going. So she's saying if at the end of the day your income ends up being higher than. So I'm trying to think through exactly what her question is.
Okay, yeah, I'll read it one more time. It says, am I able to roll over or move funds without penalties from a Roth IRA to a solo 401k if I contributed and happen to exceed the income limit?
Yeah, so technically speaking, you're not rolling it over. You'll have to pull the money back out of a Roth. So you're undoing one, and then you set up the other and do it into the other. So yeah, so not directly, but you can do it sort of in a two-step process to get it to the right spot.
Okay.
And that's one, it's a great point around the Roth IRA. We typically recommend to clients, if they think they're going to be close on income limits, to hold off on the Roth contributions. So you get until April 15th of the year following. So when you file your income taxes for the year. So here in 2022, up until April 15th, when you're filing your 2021 taxes, you can contribute to your Roth. If you think you're going to be at all close, hold off till closer to the end of the year. Make sure you're under the income limits and then contribute. It's a good piece of advice, because unraveling these things can be rather complicated.
Awesome.
So definitely.
So another question here from Bailey. I have a Roth IRA. My husband has a 401k at work, and we have a IUL. What's your opinion on IUL? My understand is that it's a life insurance policy that doubles as a retirement account.
Yeah. So she's talking about a life insurance policy and that's a life insurance policy. So in life insurance, there's a couple pieces to life insurance. And one is that it provides a death benefit. And then the second piece, some life insurance policies, like what she's referring to, they build value. So over time, there's a value so that what they're doing is the insurance company is investing your funds for you. My sense, so what I do on those is, from a planning perspective, is look at what you are paying for the life insurance coverage. So on that life insurance, you're getting a death benefit, and go out and shop around to see if you just bought what's called a term policy. So there's a pure insurance product, life insurance product, that's term insurance. So all you're getting from that is, if you die, they pay you the money, or your beneficiaries the money. So that's a pure product. And then compare what you're paying in that to the additional cost of the whole life policy, which is what she's referring to, and what you're gaining from that, and then see how that performs over time. Because what I see is it depends on what your options are for investing. I typically see, so in my practice, I do a lot of this, and I typically find that it's better for people to invest their funds outside of the insurance policies than it is to invest inside of those insurance policies. There are a lot of fees baked into those that diminish the returns that go to the insurance companies. So I run these analyses for my clients a lot, and typically we come up with a different strategy. So I guess to answer that question directly, I think grade on 1 on the 401k, grade on 2 on the Roth IRA. Some of the universal insurance policies, I'm less high on.
Bailey, does that answer your question? If it doesn't, let us know. We can come back to you. Okay, so Rebecca, we're back with Rebecca. She has a really good question, actually. Should I consider changing my business name to something more generic from my personal name that is now, to be able to possibly sell it in the future?
Wow, that's kind of a marketing question, but I love it. So I've talked to a lot of people and dealt with a lot of businesses lately where people are using their name as their marketing. And I think it's great because it resonates with people. It helps grow your brand. So I would, if it's working for you, I would stick with it. So my advice would be, if it's working, keep with it. You can always change it later. And who knows, maybe your name moves beyond you. There are a lot of organizations where the name lives on beyond the founder, so to speak, and your name becomes your brand, and even more so now. So I would go with it and just stick with it. That's my thought.
Yeah, I honestly wondered that too. So that is a really good question. I'm glad that was asked and that you were able to answer.
Yeah.
That.
Kind of outside my expertise too, but I like it. Tested me a little bit.
So we have another question from Amanda here, who's asked, what's the best way to find old 401k accounts from businesses you worked for in the distant past, but since have shut down?
To find those?
Mm-hmm.
If you know the custodian or the administrator for the 401k, that's a great place to start. So Think of Fidelity's, TD Ameritrade. Those companies run the 401ks. So if you happen to know who was running the 401k, you can go directly to them. Because at the end of the day, the business operates the 401k, but it's a separate company that's holding the assets. And if you can find the assets, then you can move it. So that would be the place to start. And then if you know the state where you should know the state where your employer was, you can contact something like the State Department of Commerce, and they will know, they should have some records for who the companies were using for administrators. So you can track it back that way if it's really lost in that sense. So that's how I would unravel that piece.
Okay. That is a good question too. I actually have never thought of that, but that's a good point. So Amanda, if that answers your question, or if it doesn't, let us know, and then we can come back to you as well. So we have another question again from Bailey. What's the income limit for Roth IRA?
Yeah, so that was where it was, see, this is where I put those in the slides and I don't have them exactly memorized. So for a Roth, it is, got it right here. If you're single, it's up to $144,000 a year. You can still contribute. There's a phase out range. So it starts up to $129,000 of income. You can contribute the full amount. And then between $129,000 and $144,000, you phase down. So you're not able to contribute the full amount. And then those same ranges for married filing jointly is $204,000 to $214,000. And then one thing, and maybe comes up in this community, married filing separately, the limit is $10,000. It's a very punitive status, married filing separately. It might be a good segue into this is, in my practice, and maybe many of you deal with it, student loans is a big piece. When I was in Washington, D.C., I worked on that a lot. That was a central part of the policy advising I did. And now I work a lot with clients on student loans. And with some of the repayment options, there's a strategy to file married filing separately on your taxes. It lowers your income for student loan repayments. On the other side of that, what we see is sometimes higher taxes and then an inability to contribute to things like Roth IRA. So I think that was a great point to bring up this as a planning tip and really show how looking at your finances holistically is so important. So student loans and thinking about how you're going to file your taxes so that you come up with a repayment plan is one piece. How that impacts the taxes you pay is another piece. And then how that impacts your ability to save for retirement is another. So it's really looking at all three together and coming up with the best strategy that balances the three. So I thought I'd bring that up because I see that a lot. And I assume maybe some of you on this chat deal with that situation. So just thought I'd bring that up as well.
That was helpful. Thank you. So Cindy has just put in her question to you. She says, if from a client, we receive a retainer in contract in say 2022, but the balance isn't due and isn't paid until 2023. Is this 2022 income or 2023? Monthly evaluations are difficult because literally every month our incoming monies are different. We are a two-person partnership photography business.
Okay. So there's a couple different accounting structures. One is cash basis and one is accrual. Most firms are, especially smaller firms, like two-member firms, are on a cash basis. So if you're a cash basis taxpayer, when you've received that cash is when it's taxable. So if it's a commitment, but it's not in 2022, but not received until 2023, the actual cash in the door, then it's 2023 income, if that makes sense. And there's the counter to that is sometimes we receive, as business owners, advance payments or the retainer side of that, where as long as that's, if you've received that cash, it is taxable in the year you receive it, even if it's not fully earned, unless there's substantial reason to believe that you're going to have to repay it. So good point. And that's something that comes up a lot.
Cindy, does that answer your question? And does anybody else have any questions at all? We still have time. So if you do, don't be afraid to submit it again in the chat. But Matt, where can people find you and connect with you in case they have any other additional questions?
Yeah. So my email was on that slideshow, but so my business is called MSM Financial. So my initials. Back to the branding world. So accounting firms, they require boringness. And so we have to use initials or last names. So that's where I have MSM Financial. So msmfinancial.com. My email is Matthew Mohning at MSM Financial. And again, I love talking with folks about their situation and just kind of run through. So if you want to schedule some time, I'd be happy to at least chat through what you've got going on and see, talk through your situation, see what makes sense. I did a lot of this when we had PPP loans going on of just talking to business owners, and I loved it. So now I hope that we're moving into a situation and a climate where we can be more thinking about saving for retirement, some of these other things instead of kind of crisis mode. I know business owners especially have been through a lot these last couple of years. Now that we're about 2 years beyond the start of the pandemic, I'm hopeful that the business owners are doing well and really able to scale and grow businesses and think about retirement instead of PPP loans and idle loans and all the like.
Oh my gosh, yes. It's so long ago, I feel like, but we're still going through it. So no, this has been wonderful and just so helpful. And again, just wanted to throw out again, if anybody has any more questions. And honestly, like I told you guys, Matt is my financial planner. He truly is amazing. Really does take the time to get to know you and what your situation is, and really offers clarity. So if you guys have any questions, don't be afraid to reach out to him. Let me just look up really quick your URL. I'm like, how do people do this at the same time and manage the chat? It's like a skill, you guys. Okay, so I found it. Sorry. Found your website. I'm just going to put it here in the chat in case anybody has any other questions or want to connect with him. Yeah, y'all, this was great. The replay will be available probably by tomorrow, or latest by Thursday. I'm going to just throw that out there, but it usually goes up pretty quickly so that you guys can go back and rewatch. And if you have any other questions, don't be afraid to reach out to Matt. Matt, thank you so much for joining us. This was wonderful. This was so helpful. And yeah, everybody, thank you so much for attending the Global Tuesdays Together. And we hope to see you next month. So yeah.
Great.
You, everybody.
Have a great day.
Yeah. Bye. Thanks. Bye.